Okay, this is Brian Stoll for Timing Strategies, Monday, November the 5th. Jeez, November already. Happy Merry Christmas. Okay, so our position we just reversed from our previous position of short. Remember, if you check out our commentary for the 2nd of November, we were short from the 30th of October. We had a 30% position. We were looking for a little deeper sell-off today. We almost got it, and again, in our intraday models, like I mentioned yesterday, we were looking to be short right at this level, below 150 half on our intraday models. Let me back this out a little bit, and which we did get, but then we got a stab low, and then if I zero in, if you give you a real quick look at what I saw and what happened with our indicators, at the end of the day, we got this massive spike up in the last less than an hour, and most of that came within about actually less than 5 minutes. If you back that off again, same thing happened back when the Fed and the Treasury did the same junk that they did going into the meeting, the FOMC meeting. Ben Bernanke speaking in front of Congress here this week is what I keep hearing. So what I want to do is just kind of go with what I'm looking for, as I mentioned in yesterday or last night's video, is potentially a test back up into the high, into the range of that 154 half, maybe as high as 155 half. And if that happens, well, then we got again another risk-free trade. If we close back above that 155 half level, right above the Fed meeting day on October 30th, well, then we got an early entry and we're looking good. We don't have to worry about buying a breakout, which I really don't like buying. And again, we're looking to get long above there as well. Our systems and our models didn't give us the strongest buy signals, so again, we only got long 30% on the indices using a basket weighted Britex end of day funds, using the Russell, the Dow, the S&P, and the NASDAQ. What we also did put in, though, is a 20% position in the utilities sector, and this is the proxy ETF for the utilities, the XLU. Reason why we did that is because it's a little less volatile. We've got the interest rate effect helping us along with bonds. If bonds keep getting supported, people I think are looking more for a little more price appreciation than the potential debt that could be puked up by the open market, by the free markets on bonds. The setup and everything that we saw was a stab of this 5-day low that we got down here on Friday, and then a trade back above it, and then a close above that high. So as long as we stay above that level on the utility sector, on the XLU above 4170, which is about a 1% risk that we're taking. We've got a 20% long position in the utilities. We've got a 30% long position in the indice baskets. So that gives us about a 60% total long position right now as the end of day of today, Monday, the 5th of November. But if we're wrong and the market does do a complete crater tomorrow, and we take out today's lows and we go somewhere back down to where I was originally looking from yesterday's video commentary, well then we've got a 30% long position. We may, based on the price action, completely reverse and go short. We may go flat, or depending on the depth of the move, we might even add to it. Because again, I'm looking for a rally, like I said, the Santa Claus Tooth Fairy rally, and Hank the Skank doing his thing into the end of the year. Other point I want to bring up is the banking index. If you look at our previous commentaries for October, again, we kept saying sell the banks, sell the banks, sell the banks, somewhere right up around there, around 108, 105. Sell the IYR, the REIT fund. Interesting point, if you want to take a look at the biggest bank, and everybody I'm sure already knows this if you listen to the news, so I don't want to go on to that commentary. But, here's Citigroup. This is the 2002 lows of October of, the pits of the bear market. We're getting closer and closer every day. Are they going to wash those lows? Who knows? Are they going to wash the lows of 03? Maybe. Don't know yet. But again, this is the banking sector. This is the financial structure of the entire stock market, whether you realize it or not. I mean, tech, utilities, software, internet, oil. That's, banking affects the banking sector of our financial system affects everything in the stock market, regardless of what earnings or anything else says. So back to our position, long 30% on the indices, and that's the weekly. Let's go to the daily. And again, we've got a 30% long position. Not a very strong conviction here, but we did have to take the signal looking for the retest of that range. And, we might be wrong. We'll see. But we do have a plan A and a plan B. And again, we're 90% system driven as far as our end of day models, but we do have a 10, sometimes 20% discretionary element as far as how much we put into the system, how much, allocation, 30, 50, 60, 100%. So if anybody has any questions, please give us an email at admin@timingstrategies.com, or feel free to give us a phone call, 1-800-675-2131. And again, this is Brian Stoll for Timing Strategies, Monday, November the 5th. Thank you and have a good night.